What's up, guys? Welcome back to my YouTube channel. Welcome back to my YouTube channel. Should in case if you are coming across my channel for the very first time, my name is Uche Chemeze Richard, popularly known as UCR Forex. In this very particular YouTube channel, I drop tutorial videos based on forex trading, and I have done as much as I can to make sure that this video is very helpful to you. And I know that when you give it a try to watch it, you're gonna see that they are helpful and they're gonna assist you, or they might even help you in one or two problems you are having in the forex market. So should in case if you find the videos very interesting and helpful to you, please like and subscribe to my YouTube channel. Turn on your notification icon so that you'll be the very perfect first person to be notified by YouTube whenever I drop a new video. Yeah, and as well, we also have a big information to announce to you guys. UCR Forex is launching, or we have already started our online mentoring class. It's more like a private online mentoring class where we more focus on your development and how you are responding to our teaching. We're going to teach you forex trading from the beginners level to advanced level. Be it whether you are already a pro trader and there are certain things that you don't understand, there's no problem, you can enroll. We're going to tackle whatever you are finding what difficulties in the forex market. And also you have a lifetime support from us, as we are going to be trying as our best to make sure that you stay profitable in the forex market. Just with 50,000 naira, you are part of this very 2 months mentoring class. Why don't you give it a try today? It's just an online class that is not like your usual online class where they normally drop videos for you. It is not like that. This one is totally different. Should in case if you have been looking for a way to communicate with us, this is our number. You can also chat us up on WhatsApp with this very word, with this very number, or you can call us anyone you are comfortable with. So, guys, without not wasting much of your time, let's jump into what we have today on this video. So today I'll be talking about risk management. This very video is specially made for people that are in my Telegram community who has asked for me to make this very video, that they really need to understand how to practice risk management. And if you watch this video to the end, believe me, you are going to come across something that you have not been doing before, something that you have not been paying attention to before. So guys, this is all I'm giving about what risk management. So what is risk management in the first place? What's risk management in the first place? Risk management is just like a strategy on its own. It's just like a strategy on its own to help to reduce your losses. To help to what? To reduce your losses. I mean, reduce your losses. You know, you have been pointing that your mind, you have been focused that the forex market is just every time profit, that I'm going to make money. You have been coming across, you have been watching most of your online influencers who are riding a lot of luxurious cars, and you feel that this thing is just like that. No, there are some certain things that are involved in this very forex market. And one of the deep truths that you don't want to admit is what? Is loss. Definitely you are going to lose in the forex market. But in this very video, when you watch it to the end, you will understand of how your losses cannot be compared to what? To your winnings. Your losses cannot be compared to your what? To your winnings. That is the importance of what? This very video. So guys, you need to know that the forex market is what? Is a risk place. Is a place where you can lose all your money depending on any amount you have. You can lose it. So that is why I say that risk management is a strategy that what? That helps you to reduce your losses and also help to scale up or enable you to make more profit. Help to scale up or enable you to work to make more profit. This risk management was designed to enable you to understand that forex trading is not that way you think. That is a business and it's a journey on its own, in which you need to understand some certain things that's going to enable you to work to stay profitable in the long run, not what? Not giving up in a short period of time. So since you have understood that risk management is that, now let's now proceed like you funded your account, or let's now tackling your account. Now let's say you funded your account, be it in any broker of your choice. You funded that account, you funded with $100 or with $200 or with $300 or any amount you can be able to afford, even if it's $10 or $5. Now you need to know that your money is just like 50% on risk and 50% on what? On a reward or profit. You get, is on 50% that you can lose it, and it's on 50% that you can what? That you can make reward or you can make profit on top of it. Now, since you already know that, you need to proceed to know that there's something we call stop loss. There's something we call what? Stop loss. And I know that by now you guys may say, is it not something I know? No, 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 no. Calm down, calm down. There's some things I'm going to explain to you that you don't know. You don't know it. So you need to know there's something we call what stop loss, and you need to know there's something we call what take profit. You see, this stop loss and take profit is vital and is essential for you to understand how it works. Now, it's just like not manually the way you add your stop loss and your take profit, you say everything is okay. No, I'm here to teach you today that before you go into the forex market, you need to have a specific loss. Like you need to in your own admit or accept or make a decision that this is the amount of money I am going to be losing, and if I lose this money, I'm no longer interested in trading today, or I'm no longer interested in taking any trade throughout this week. This is what you really need to understand. And also you need to also, in the part of take profit, you need to have a realistic goal where you say, in this week, if I'm able to make so amount of money, I think I'm okay. I shouldn't be fighting the market. I shouldn't be looking for a way to make more, because I know when I make this so amount of money this week and I was able to make it again next week and I was able to make it again next week again, that's definitely I'll be able to achieve what I've been looking today in the long run. It's just a journey. It is not the way it is in your mind. Now, since you know there's something we call stop loss, and stop loss, the reason why they introduce stop loss to you is to enable you, is to stop your losses. You see, one thing I hate when traders normally say, how I hit my stop loss, they become very sad, and they are looking for a way to revenge the market. They are looking for a way to attack the market to get back their money. No, it's not meant to be like that. As in your stop loss that you hit, or the market that hit your stop loss, you just stop a loss. You stop a loss, because I believe that that is not the only money you have in your account. And the reason why you place that stop loss is to admit something. So whenever you hit your stop loss, admit it that you stop a loss. You stop many losses. Yes, you stop what? Many losses. And that loss you stopped has given you a chance to breathe and see why you lost, and see whether there's any other opportunities, or see whether there's a time for you to step out of the market. This is the reason why you need to what? Marry your stop loss. And again, you need to know that you need to reach small percentage of your account. Now, you need to know how to risk small percentage of your account. Now, let's say that you have something like $100 in your account. This is your account now. This is your equity. You have $100 with you, and then you are asking yourself, how do I risk small percentage of my account? Is it by me just risking $5 or risking $10? No. You see, you just need to understand how percentage works in this. Just like the way you do your normal business, where you ask your friend or whatever, 60/30, this and this. This is how it is being done here. Now you funded $100. Now ask yourself, what kind of losses, or which losses now that can that will hit me, or what kind of losses will I lose now that will affect my mentality, that will affect my mind. You see, forex trading is a personal journey. It is not a journey with you and your mentor. It's not a journey with you and your friend. Maybe that your friend over there can lose $100 and he'll be comfortable with it. You are not in his bank to know how much he has. Maybe you come across your friend that is able to flip this $100 to $1,200. He wouldn't show you the losses. He will not show you those ones. So he's going to show you the winning part. And when you go to try it, it backfires you. This is now where your mind will scatter. So now you need to know the exact amount of money what you need to be losing on this very particular what account. Now, when you funded this account, you need to ask yourself the first question. Now, what kind of losses can I lose and I will bear it? As in, ask yourself that. You say, okay, fine, I can be able to lose $10 and I will bear. No, I can be able to lose $5 and it is okay with me. Now, since whenever you lose $5, that is going to be okay with you, you're not going to revenge the market, your emotions will not be given to the market, then that $5 you should stick to it. That $5 you should stick to it. It should be any trade, any buy or sell that you are taking, be it coming from your mentor or it's coming from you. You should make sure that your stop loss is not above or beyond $5. So have you seen now? This is now $5 as your what? As your stop loss. Now, in as much as you have set this very stop loss now, you have said, yes, I am now risking $5. Now, when we go over to TP, When we go over to take profit, you no understand the take profit now. The take profit is a part in the forex market, is nothing like a space or a leeway, or something like a space in the forex market where you are telling the forex market, if you get here, take me out of the trade. I'm comfortable with the what, with the profit I've made. Yes, this part is very very essential. Most of you guys doesn't really practice this part well because you want more money. You are approaching what, the market with a selfish mentality. You need to know how to set a realistic take profit. When I say realistic take profit, this is not a profit that will take you to your village. It is not a profit that you will make today and you go and buy a car. No. It is not mandatory that you are going to solve all your personal problems on one particular trade. No. The market is not closed yet. The market is not expiring. It is still there for you. It's going to be there even till you leave this world and meet your grandchildren to come. So you need to have that mentality. It works that way. So when I say setting a realistic take profit, it should be this way. Okay, fine, I am risking $5 now. I should be able, I think if I make $20 or if I make $15, I will be very very okay. Now let me balance the equation to you. You say if I make $15, I'll be very very what, okay. If I make $15, I'll be very okay. I think I'm okay with $15. Yes, what you just did now is that you are risking one to make what, three. You are risking one to make what, three, because you are risking $5 to make what, $15. That $5 you are risking is just a 5%, a 5 percentage of your what, of your account. When you say I want to risk 10% of my account, that means you want to risk what? $10 because you funded $100. When you say I want to risk 1% of my $100 or $100, that means you are risking what? $1. When you say 2%, you are risking what? $2. Are you understanding how this thing is working now? When you say that my profit target is what? Is, I think if I get like 30%, I'm okay. Or if I get like anything thereabout, that is it. You get? But in this very part, I will just tell you, just be realistic. Just be realistic. When I say I risk $5, I should make something above $5, or $5 times two, or $5 times what, three. That is what we call what, 1:3. It should not be that the market is going your way now. You entered buy from this zone. This is the buy you took. Sorry, let me reduce it. This is a stop loss. You know now, you know before now that the red zone is your stop loss, and then you took a buy. Let me show you again. Here I'm coming. Okay, you took a buy from this zone and the market started pushing in your favor, right? The market started pushing what, in your favor, and look at where you kept your TP. Maybe the market is approaching that your TP with very very fast. It's coming very fast, and then you saw how fast the market is approaching your TP. Then you started increasing your TP. You started increasing your TP. You started increasing your TP. What you are doing right now is what, you are becoming what, greedy. You are becoming what, greedy. You have shifted your mind from your decisions to what you are now making. You are now becoming emotional. You are giving your emotions to the what, to the market. So when you are doing this kind of thing, you are not practicing what, risk management. Your TP should be your what, your TP. You get me now? Your TP should be your what, your TP. It should not be that the market is coming out, it's coming so close and you are shifting it to make more profit. No, it shouldn't be like that. Because think about it, when this thing start reversing against you, would you be shifting your stop loss? No, you wouldn't be shifting your stop loss. You be there, be crying. You even be speaking this. You even be asking God, please let this thing go back to my entry first. Let me just close. You see? So I'm trying to enable you to understand what that can keep you, what can make your emotions be what, intact. Now again, I want to tell you guys, you need to know when to set break even. Possible, close that particular what, trade. Now, in as much as you set your realistic take profit, you have said that I just want to be making, I have risked $5, I want to make $15, and all of a sudden the market is currently approaching your zone to give you that $15, and maybe somewhere here might be like $10, maybe somewhere here might be like what, $10, and the market now is looking like it wants to reverse. The market now looks like it wants to what, reverse. You have spotted a candle formation, you have spotted change of character, you have spotted every reversal pattern, and you know that this thing is going to reverse against you. Now here are the two things you need to do. You have to decide whether this money I have seen now, whether I am willing to admit that if it reverses against me and hit my break even, that I will be okay. Like, it's true I saw $10 now, but let me just use my break even. That I believe that this thing is going to buy, that it's not going to hit my break even. Then you make this decision. Then another thing you need to know is that if it hits your break even, if it hits your break even, you know that this $10 you sold, you're not going to see it again. As in, it is going to close you without loss or without what profit. You're not going to lose and you're not going to make what profit. Now if you can be able to bear that one, there's no problem. But if you know that if this thing reverses back and hit your break even, that you are not going to bear it, that you're like, oh God, how can I see $10 finish and then I'm no longer seeing anything, and now the market has closed me without no profit or what, and you're looking for a way to enter buy again, my dear, close that very particular trade. Close it. Close it. See, close it. Oh, close it. You should not do things because you see that your friend is doing it and you want to keep to that. You should not do things because you see that I'm doing it. You don't know the amount of money I have. You don't know the amount of money your friend has. So start doing things the way your emotion is responding to it. Do not just be doing things because you want to please somebody. Think about it. When this thing hits you, how will you feel? So just try to center yourself in a way you respond to what emotions. So if you know that you cannot afford that after this thing reverses back to hit your break even, that this $10 now, boom, you're no longer going to see it again. Oga, close it. But if you know you can bear it, set your break even. Set your what? Your break even. How do you set your break even? That is where you move your stop loss to your what? To your entry point. That's where you move your stop loss to your what? To your entry point. And when the market comes back and hit it, you are not going to lose what? Anything. You have secured your capital. Are you getting me now? So this is what I mean. What? When you are setting what a real, when know when to use, know when to set break even, or possibly what, close that very particular trade. Or better still, consider scaling out positions to secure gains. Now this one again is very important. I know most this, maybe this one now, this one works this way, it works this way. Now you enter the buy here, you wanted to press that your buy. Sorry, I don't know why this indicator is me. I don't know. Okay, you wanted to press that your buy, you wanted to enter the market and you want to press buy. Are you getting me now? Or you want to buy or whatever, or you want to sell, anyone you want to do. Then all of a sudden now, then you enter that very particular buy. Listen to what I said. Consider scaling out positions to secure gains. Then you have spot your strategy, you see that this thing is going to buy. Now there's something I want to tell you. Let's say you want to use one lot size to enter this market. Let's say you want to use one lot size to enter this market, or let's say you want to use two lot size to enter this market, or let's say you want to use 0 point, let me go back to the beginning, 0.02 to enter this market, or you want to use 0.1 to enter this market once. Now this is how you can practice this thing I wrote. Now do not enter the market with one lot size once. Try to divide this lot size. Try to what? To divide that lot size. Now how are you dividing it? You by dividing by reducing the lot size to what? To 0.5. Then you press what? Buy. You have entered buy. Enter the buy again without what? Without 0.5. As in click it twice. Oh, now you have entered with what? With one lot size. But you did not enter it what? Once. You did not enter it what? Once. Now this thing will enable you that when the market is pushing to your favor, when the market is moving in your direction and the market is now, maybe the market is about to reverse, or maybe the market is giving you something that looks like it's going to come back to your entry point. Now do you know what you are going to do? The next thing you are to do is what? Is to close this very particular first position. Close it. Maybe from here to this very peak might be like what? Maybe from here to this very particular peak might be like $100. Might be like what? $100. Are you getting me now? Maybe from this low to this very high might be like $100. Now, do you know that you have seen $200? You have, because this first one will give you $100. This second one will give you what? $100. Now, all you have to do is what? Close one position. Close what? One position. Now, you can now ask yourself whether you are to set your stop loss to break even, or whether you will not set your stop loss to what? To break even. By you closing this very particular first position, your stop loss, your what you are risking, the amount of money you are going to lose will what? Will decrease. It will move. If you are to lose $50 before, it will move from $50 to what, to $25. Are you getting me now? To move from $50 to what, to $25, and you know that the market has pumped and give you what, $100. Then even if this thing comes back to hit your stop loss, it is only going to minus $25. It is only going to take out what, $25 from you. And when you take out $25 minus $100, you will still be on what, on profit. So have you seen how to practice this very thing like that? So do not just enter with your loss, with that particular one loss size one. Try to split it. If it is 0.1, split it to 0.5, 0.5 into 2, enter the buy. Are you getting me now? So this is how you can be able to what, to secure or scaling out some of your position. That's closing some of your what, your position. So that is it, all about all the things I have about what, stop loss and what, and take profit. Now the next thing now I have what is losing streak versus what, winning streak. Losing streak versus what, versus winning streak. I come again, losing streak versus what, winning streak. You see, this part is very essential, because you need to know that there is a point in the market where you will be winning, as in you are going to be hitting the market back to back. You'll be making profit back to back. You make $100 today, $200 tomorrow, $300, as in you'll be making profit. Eh? Then there is a time in the market when you will be making, as in you are going to be you are going to be seeing series of losses. Then how do you manage this period? And what can enable you, and what can help this your $100 to be there with you before you move from losing streak to winning streak, or before you move from winning streak to what, to losing streak? Because most of you might just enter with that $100, and when you must have lost one or two times, boom, your account is gone. No. With this losing, with now that you have known there's something we call losing streak, you need to understand it works this way. Before I explain this thing, it works this way. Now you funded $100 and you are risking $5. You entered buy and the market hit your stop loss. You lost. And then again, maybe the same day you came back to the chart, you spot all your confirmation. You are seeing there's something that looks like it's going to buy. You bought again, and then the market hit your stop loss. Now your emotion is waking up, because you have lost $10 and you have seen that it's remaining what, $90. Now you entered again, you lost what, $5 as well. Now you entered again, you lost what, $5. Maybe in that day you lost like $20. And then you are no longer with yourself. So let me tell you, you need to stay calm. You need to what, stay calm. Avoid emotional decisions. Now when maybe all this thing was your setup, all this thing was the analysis you did, and then you lost the four of them at once. You see, I want to tell you that you need to stay what, calm. You need to avoid emotional decisions. How do you avoid it? Leave the screen. If that is the first setup you have made for the week, you have told yourself, I am only going to trade this very first setup. Once this very first setup I have seen it, I will trade it, and if it is not there, I will not trade. This is your decision. Then finally you have lost all of them straight. Please, my dear, leave the screen. Leave the screen. Go and play games. Go and engage in other activities. Do not be there looking at the screen, because you are going to be tempted to take the fifth trade and you are going to lose it. Because why you are able to take that fifth trade is that your emotions, you have given your emotions to the market. That time you say, omo, I've lost $20 like this, I need to recover it back, I need to get it back. When you start hearing that word, just know that you are now about to lose your account, because you're going to lose that word account. So please try and leave the screen, go and engage in other activities. Maybe tomorrow, come back with fresh word, fresh mind, and redo your analysis. And again, review your trading strategy. That is when you come back the next day, not that day again, no, because you might be maybe small candle moves. Now you start pressing buy again or sell. No, just review your strategy, review the reasons why you lost that very trade in the next day. Review it. You might see one or two things that made you to lose that trade in the next day. The next thing is what? Reduce trading size to minimize what? Risk. Are you getting me now? Now let's say you have lost all this money, even this part. You see this part now, this part is really essential for you guys to understand. Now you started trading with one loss size, and now you are losing massively. You are losing massively, and now you know when you go into the next trade, with that your one loss side that you might lose your account or the next trade might affect you badly, you just need to reduce it. You just need to do what? You just need to reduce that loss size. But the truth of the matter is that before you fund this $100, as I said earlier, you need to ask yourself, what kind of losses can I see and I bear it? So if you can be able to bear those losses, there's no need to reduce your risk. Just keep on what? Keep on trading with that loss size. Because as we continue to this video, I will tell you the reason when maybe you might get one or two and the market might give you profit and recover all your losses. So you get, and the fourth one is what? Take a break and reassess the market. Yes, it's essential. Take a what? A break. It's not really mandatory that you hit your stop loss till that the whole world is now against you or that you don't know what you are doing. No, you know what you are doing. I'm giving you all the thumbs up. You know what you are doing. You are trying there. You are really doing a lot of good things, but you need to do yourself some good by leaving the market. Just leave. Go and engage in other activities. Try to see something that will make you to be what? To be happy and make you forget there's anything what happening. The next thing is what? Is focus on your risk management, not on recovery. Yes, you have said that you'll be losing for $5 and the $5 is okay with you. Yes, as you are losing and you have lost all these four setup, do not in any way try to enter the fifth trade because that you have spot some useless formations or you have spot something that looks like it's going to buy. No, it is not going to buy. It is going to scatter your account. It is going to liquidate you. So this is what I mean by what? Recovery. By you trying to press the fifth buy, you are trying to what? To recover, which is bad. Which is what? Bad. So the next thing is what? Learn from your mistakes, adjust where needed. Exactly. The next thing is what? Set a realistic goals and stick to your plan, just like the things I told you. Learn from all those mistakes. Do not just try to complicate issues. Learn from your mistake and set a realistic goals and stick to that your plan. My plan is that I will keep on losing $5. Like I will only lose $5 in this my $100 account. That I lost this four setup does not mean that I need to change it. No, I will keep on losing $5 till what? Till this account is gone. I am not going to increase it. Neither am I going to what? Decrease it. Finish. Believe me, you are going to what? You are going to recover something. So now that is how you stick to your what? Plan. So before we talk about this one, let's just talk about this one on your winning streak. Winning streak in forex trading. Stick to your trading strategy. Yes, stick to your what? Your trading strategy. Now you are making money. You are making money back to back. You funded that $100. The first step, you got what? $15. You are so happy. Welcome, welcome. You are welcome, my dear. So the next one again, you made $15. Boom, nice one. You made $15. Boom, nice one. As in you are making profit, right? You make another profit, you make another profit. The truth of the matter now is that you need to stick with your what? Your strategy. Do not come back tomorrow and see something that look like is going to buy, is good, is this and this. You bring pride, you bring ego into the market. The truth of the matter is that the market doesn't know that you won yesterday. The market doesn't even realize your mentor. The market doesn't even know that somebody like you is existing. If it's come to liquidate you, it's going to liquidate you. I mean, it's come to hit your stop loss, it is going to hit your stop loss. Regarding where that signal or wherever it is coming from, the market doesn't know all those things. And when you are winning, please, my dear, avoid over leveraging. Do not increase your loss size because you have seen that you have won 3 times. So don't try it. Don't try it. Do not try it. As in, you have discovered that maybe 0.1 or one lot size is this lot size I've been using to make $15, $15, $15. Don't increase it to two lot size. Don't increase it to 0.1, from 0.1 to 0.2. Don't try it. Don't even try it. If you try it, the repercussion, you will not be able to bear it because you are going to cry. Definitely you are going to cry. Are you getting me now? So the next one is what? Set stop loss to lock in profit. Set what? Set stop loss to lock in profit. Now this way it comes. Most of you now, maybe when you're on your winning streak, you are so happy and all of a sudden you entered one particular trade. That is it. You enter the buy, you enter the buy this way, you enter the buy this way. See, I'm telling you things out of experience, so but you won't hear. You might not even want to watch this video to the end because it's all about English. One day you come back to watch it. You enter the buy from this very zone and the market bought little. Now the market is reversing against you. Then all of a sudden you remove your stop loss. The market is coming back against you, you remove your stop loss. Now you now tell your friend or you now tell yourself that after all I have made $50 this very week. I know that even if he passes my stop loss, it is going to reverse. Hey, is going to reverse. Look at what you are doing to yourself. Believe me, if you remove that stop loss, this thing will keep pushing down. It is not going to reverse. Definitely, you don't want to hear this one, but it's not going to reverse. It's not go it is going to keep moving this way, and that is when your face will turn from, if you are fair you are going to turn red, if you are black away your color will turn something else, because somebody will not be able to recognize you again. Believe me, to keep pushing down, and definitely this could be a time that you have even increased your loss size. All those money that you have withdrawn, you are going to bring it back and fund and add to this, and everything is going to work. Gone. So do not just remove your lot size because you see that this thing is now going against you, or maybe your massive profit, you want to show to your friend that you can control the market, you know where the market is going to be going in anywhere, so you can remove your stop loss. Don't try that. The next thing is what? Don't chase risky trade. Now this is comes in for signal providers, for people with pride, for people that just want to be praised every day. Every day you are looking for a way to entertain your entertainers, you are looking for a way to make somebody happy, you are looking for a way to make money to go and flex, and then you are looking for every trade you are looking for any signal, or you are looking for any setup that looks like it's going to buy, because I'm using that word, that looks like. It's not your strategy. Maybe your strategy is SMC, your strategy is support and resistance, and maybe as an SMC trader, then you will now see that what is about to play out is support and resistance. You say, after all, they taught me that support and resistance, buy at the support, sell at the resistance, and now maybe here is now the support level, and then you have forgotten that your strategy is SMC, that your strategy gave you $15 into trade, and now you are trying to turn it now because you need money that day. You want to now start using support and resistance because you see it is forming. My brother, my brother, please don't try it. Don't do what? Try it. The truth of the matter is that you cannot be trading what every day. You cannot be what? You cannot be trading every day. A time will come when you need to step out of the market, which we are coming to that. So stay disciplined and not overconfident. I already explained this one. Stay disciplined and not over what? Confident. The next thing is what? Avoid taking unnecessary entry or losses. Yes, avoid taking unnecessary entry or losses, because I will use that word, losses. Yeah, do not every morning you just want to know. It's not done that way. It's not what? It's not done that way. You need to know when to wait for your setup. You need to know when to wait for your what? When to wait for your setup. It's not every setup that you take. You also need to know when to leave the chart. You need to know when to leave the chart, and you need to know when to come to the what? When to come to the chart. You don't need to be seen every day looking at the screen. It's not done that way. It's not what? It's not done that way. Lastly, avoid over trading. Avoid what? Over trading. Avoid over trading, I means, is when you start trading multiple setup. You want to use chart pattern to buy today, the next 2 hours you want to use SMC, in the next 3 hours you are using another strategy, tomorrow, as in every day, to even add to your problem sef, you have like 50 pairs, you have like 30 pairs that you are looking at, only you alone. God. So please, what I'm telling you now is that you need to what? Stop over trading. You need to at least pick something like 6 pairs or 5 pairs, or even if you are going to be taking like up to 10 pairs, you need to have a realistic what? Risk management. Are you getting me now? But I will advise you to at least stick to 6 or 3 pairs, at least for now. But if you're a pro trader who has gained more experience, there's no problem. Even if you are trading like 10 pairs or 12 pairs, just at least stick to that your risk management. The truth of the matter here is that the fact that you lost all this for $5, you lost all this for $5, and then you are sticking to your risk management, you are sticking to your risk management, maybe the fifth one you are coming back to take the next day, you enter that trade and you stick to your risk, do you know what is going to happen? The market might move in your way and you will recover all these losses. Remember that, okay, you remember that your take profit is normally $15. Remember, right? Now you entered another buy the next day. You came back to the chart the next day. You entered buy, and then the market started going your way. Finally, the market hit your TP. How much did you make now? $15, because you are sticking to your reward. Then how much do you think that you are losing now? You are losing $5. You are now losing what? $5. And there's a tendency that you, maybe the next day or maybe after 2 days, you come back to the chart and you spot your pattern, you enter again, you might what? Make what? $15, and you recover everything back, and you will not be on what? On profit. But you have that very particular person who might, when he has lost this very first trade, he say no, I need to recover my money back by all means. He will now increase the loss size. He will now what? Increase the loss size, and when this thing hit his stop loss, he might end up blowing the account, or he might end up losing what? $50 with $5 remaining. Now does it make sense? It doesn't what? It doesn't make sense. So stick to that your particular what? To that your particular lot size. So guys, any whenever you fund your account, be it $1, be it $10, sorry, be it $20, $1,000, any amount, you need to understand the kind of lot size you need to use to approach that market, that your account with. You need to understand the kind of what lot size that you need to approach the market with. At least we have standard lot size, we have mini, we have a micro mini lot size, we have micro what? Lot size. So you need to understand the very particular lot size you should be using. You already know that one lot size is for huge capitals. Then mini lot size is at least for not really other huge capital, but at least you can trade it with $10 account. You get, and then maybe the micro lot size will be a stable what? Lot size for your account. And lastly, do not do things to please your friends. Do not hold a trade that has given you money and you say it need to fill a fair value gap, it need to hit TP, it need to hit that other block, it need to do this, it need to do that. And then you know that if this thing reverses against you, that you cannot be able to bear it, my dear, do yourself a favor now and close it. But if you know that you can be able to bear anything, there's no problem, hold it. The truth of the matter is that forex trading is a journey. It's a personal journey, not a journey of you and your friend. Are you getting me now? So this is all I have for you guys about risk management. And if there's anything you don't really understand that you are struggling with, please try and leave it as a comment section below. And then if there's any topic that you also want me to make, don't worry, leave it below. I will definitely reply you, and I'll figure out a way to help you to understand how it works. So once again, guys, thank you guys for watching to the end, and I believe that this very video will be an inspiring one and a helpful one to you guys. Thank you so much. Don't forget to share my videos. Thank you.